Good morning, traders. It's Thursday, the 26th of January 2017. It's 8:02 a.m. Chicago time, 9:02 Eastern. Thanks for joining me again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall stance of the market so far continues to be on the risk on side. The market has actually stagnating right now. It's holding right at the S&P 500 is holding right at yesterday's close. Um, we'll go over what happened yesterday versus what was expected here in a minute. The news, not much. Everybody's celebrating Dow 20,000 from yesterday. But at the same time, UK GDP came in stronger at 0.6% for fourth quarter versus 0.5 expected. And other than that, there's still some, major mergers going on. Johnson and Johnson's buying Actelion, Actelion, something like that, for $30 billion. And eBay did really well during the holidays. We still have tweets from our president here battling with Mexico and NAFTA. Initial claims came out about a half hour ago, 259,000 versus 247,000 estimated. Continuing claims at 2.10 million versus 2.04. Both numbers are higher or worse. The 4-week average is 245.5 thousand versus 246.75 prior. And December advanced goods trade balance came in at negative 65 billion versus negative 65.3 billion. December preliminary wholesale inventories month on month came in at plus 1% higher inventories versus 0.1% expected. Caterpillar reported today 83 cents versus 65, a big beat. 9.57 billion on revenue versus 9.75 billion estimated. 9.57 versus 9.75. And then Ford also came out with 30 cents falling short of 35 cents estimated. 38.7 billion in revenue versus 35.6. Those are the major ones that reported today. As far as what we've got going forward, at at 15 minutes after the open, we get the U.S. Services PMI prelim for January, expecting 54.4, 54.4 prior is 53.9. At 10 a.m., we get two numbers. We get new home sales for December, 588,000, and also leading index for December at 0.5%. The prior is 0.0%. We get natural gas at 10:30 Eastern, and then other than that, we go quiet on the release front. Also, we don't have any speakers. Later this afternoon, after the market, we've got major corporate earnings. Google expected to release its earnings after the market's 9.63. $9.63 expected. Starbucks at 52 cents. Intel at 75 cents. And Microsoft at 79 cents, expecting some volatility and reaction after the market. Remember, the tech sector is the largest sector in most indices, U.S. indices at least. Okay, so that's what we've got. This is what we had yesterday. Yesterday we were looking for a continuation up. The market was opening around 2284 during the trader bite, and the primary expectation is for a sideways trade that fails to close the gap below. The expectation is it attempts to, but is unable to close the gap, so we keep a gap zone open, and then the market starts to shift up. This is normal behavior after a trend day. We look for the continuation. Next, we look for the market to start to weaken on the buy side into new highs, and then to start rotating back down. The big target again is 65 on a revisit from the top. Once we break new highs, we generally look for the most recent MC point of control as a spot to base from for the next rotation, either up or down. Generally up has been the way to go. So that's exactly what happened yesterday. This was the hypo that worked. The secondary hypo was for the market to sit sideways, attempt higher, and then once it starts moving to and fails to hold higher prices, in other words, it starts to push the OS low, pull back to mid, push to the prior day's high, which was 72.80 and a half. Then we're looking for it to push into the prior day's range and test 2277.25, which was the point of control. That's the secondary hypo. I said yesterday this hypo was remote, but it creates the better opportunity. It's not likely to be as grindy or as tough to trade. This hypo did not work. Okay, this is what we actually did. Man, I keep moving computers, so my OS is often off. This is what we did. We had an opening swing, a clear opening swing, open auction out of range, clearly an open auction, meaning short-term time frame traders are in control. The OS high is 87 and a quarter. Then we finally get an impulsive move up, a grindy impulsive move. Now we rotate back to what? We rotate back to the opening swing high, again from here. Also, mid and VWAP confluence in the area. This was about the cleanest opportunity to get long of the day as the first opportunity. The market then continues higher to 92.75, pushes through the mid, gives the mid about a point and a half or so, a point of heat for another continuation outside of the IB. The IB is broken to the upside earlier, and now it continues higher. The market was trading with the point of control down here for a while, but the point of control shifted to the top of the range with a weak high. What does that say? That's telling us that there's a high probability, not a certainty, but a high probability that we're likely to keep pushing higher overnight. In other words, the market lingering near the top here tells us that the prices are not unfair, or there isn't an excess up here. An excess would look like this. It would be a very, very low volume. Nobody wants to participate, and the market starts to rotate lower. When you have a profile that's doing this, it's saying that there's a whole lot of interest in these prices. And there wouldn't be interest in these prices if they were unfair. And so the market is not having an issue with these higher prices, and so it continues to drift upwards. And that's what we did. We pushed to 22.9950 overnight. We have a gap zone below us. I need to add that to the flex levels in the market on the flex levels. But there's a gap zone of about 4 points, 22.8050 to 22.84 and a quarter. Looking for that to get filled over the next day or two. I'm expecting the market, even though it's holding steady, I'm expecting the market to start rotating downwards. The overnight session reopened where it closed. We had a quick pulse up on the Asian Open, and then it drifted up to 22.9950. And as you can see here, we've moved from the upper distribution to the lower distribution. We've shifted the point of control down, and we're holding near the lower distribution. I'm looking for this to continue to test lower in the morning. So I'm looking for, as we come into today, my primary hypothesis is for the market to actually, since it's opening right against the point of control, right against the high of the range, I'm looking for a push higher this morning to fail, and then for the market to begin to take its rotation down. And the potential here is that the ideal situation, and I don't know if there is such a thing in trading. The ideal situation is it closes this gap zone today, but it's likely to push down and linger in here today. That's what I'm looking for on Hypo 1. Why? We still have we still have this pressure to the upside. There was some um, pretty good delta on the close yesterday. You could see here 30,000 to the positive on pretty good volume yesterday. You could see the volume here. These bars are higher than the yellow bars inside them. If you can see that, the yellow bars inside of these bars, inside of this volume histogram, is the 20-day average of volume for that 15-minute time slot. The table, this chart is a 15-minute chart, and you can see that yesterday the market maintained good volume all the way through with a good delta. There's a fair amount of interest to the upside, but it's likely the market's likely to rotate down to engage with buyers a little more before the next leg up, if there is a leg up. We're up against a major strike here, 2300, and that's how things are shaping up. So you can see it gets crowded at 22 and the 2296 50 area is the expected range high for the week, 2296 50, and we got to 2299.50. And we have a measured move target at 2350. I expect that the market is likely to hold steady here for a bit. So that's the primary hypothesis. Secondary hypothesis, instead of pushing up, it continues the move down. So chop on the open because we are in balance against yesterday's value and point of control. It makes a weak attempt lower, and then it finds its buyers again and starts to drift up to push through to this 2300. This is Hypo 2. In either case, I'm expecting today, because we're in all-time highs, I'm expecting today to be fairly slow. So be patient. Again, I know I've been saying that pretty much every day for the last 6 months, but that's the trading that we've had so far, is this kind of a grindy trade. And so just, pick your spots, don't get stubborn, make sure you're not staking too much of your account on any given trade. The other thing I wanted to cover here today, by the way, I'm not expecting an open drive in either direction or an open test drive. I'm expecting this to be a slow churning kind of day. There should be plenty of opportunities today, given that we are in an island day from yesterday. The one thing I wanted to talk about real quick is the reason I'm covering the ES, which is the S&P Mini Futures, as opposed to covering crude oil and DAX and stocks and NASDAQ and gold and euro, and it is by far, in a way, the most popular futures product, but also I cover it and I'm focused on it, even though it's not the only or my primary trading product. I focus on it because it also addresses everyone who is looking at equities and stocks. The thing to walk away from, and I keep re-emphasizing this because it's important to me, the thing to walk away from with these trader bites is not what I'm saying or what these hypos are. The thing to walk away from is to see the consistency with which I am repeating the routine day in, day out to establish the story, which is the bias and context from which I trade, and to apply this to your product, whatever it is, whether it's potash, Monsanto, or Apple, or Google, or gold, or crude. It's the same stuff. And so focus more. If you don't trade the S&P minis, focus more on what is the logic behind the auction and what is the logic behind the expectations and how do they play out. This is why we review the prior day's work. Anyway, just wanted to leave you with that thought. Good luck today, and I will catch you tomorrow. Don't forget, the video for the order flow webinar was released. It's there's a tweet on it, and it's also in the description. Just add your name, and it'll automatically send you the video. Okay, good luck.